welcome once again. We've gone through a series, a whole weekly series, and we've learned so much. Finally, this is the last day, and this is our last session we're having. And today we are putting it all together, how to work the maths. All right. There are two ways to trade our setup. There is the first one called the down to top analysis. That's to analyze, right? Then the second one being the up to down. Sorry, from the top to down analysis. Top to down analysis. So these are the two ways you'll be looking at your trade on the market. All right. But we are going to focus on down to top analysis today. So what did we explain? Right from the get-go, we have described everything basically so simple that even an infant will be able to understand, and I repeatedly went over some explanation so that it will hit the nail to the head. Our setup goes this way: a break of structure. Okay, let me make it very technical so that even anyone can see. So our setup goes this way: a break. This is our zone, right? We first experience for a buy setup. We first experience price comes to the zone, then there is a break of structure. All right, meaning it first begins with a basic market structure that fails, and I explained it to you. That means after the break of structure, we are expecting, according to basic market structure, we are expecting the price will come back here, then buy. That is what they said, but that is not what will happen. So there will first of all be this break of structure, that is the basic market structure that fails. There will first be an inducement liquidity, so there will be a sweep of this liquidity here. So there is first a sweep, a break of structure. Let me get this thing in the right position. Let's do this. So there will first of all be a basic market structure that fails. So there will be a sweep of liquidity, a break of structure, transactional liquidity, which has been created, right? 1 and 2. So this will be our structural liquidity right here. Then we expect price to come back here, then buy. So our interested zone is here. This is where we mark our POI. All right, that's where we are taking our buy from. If it's a sell, we said the same thing. We'll have our zone here. What zone is that? We realize the price will come up, create this break of structure, right? Basic market structure that will fail, meaning there's a sweep of liquidity, a break of structure here. That's our transactional liquidity. Price comes back, forms a structural liquidity right here, then finally comes back again to sell. Yeah. And what did we say? This right here is our POI, our point of interest. All right, that is where price will come and react from. So that is the setup that we spoke about. So whenever we go to the market, this is what we are looking for in the market. All right. Then now, what are we looking at in this down to top analysis? How do we trade it? How do we work things out? When we go to the market, when we look at this setup, there are 3 things. We have to validate this setup. So we have to validate the setup. First of all, you have to know that we don't trade structure. We don't trade structure. We tell a story. All right. What do I mean by we don't trade structure? Some people have this thing in mind. When you see this, it means this is bottom double top. All right. So double top means it's a sell sign, meaning price is going to sell. Meaning this is a double top. Price has reacted here twice, so it's a double top. Or meaning you have to look for sell. Do you get it? But I have seen price do this and continue like this before. Some would also say, when you see this, what is this? This is a rising wedge. And when it's a rising wedge, it means that price is about to sell. Unfortunately, it's not always so. I've seen a rising wedge severally where price will do this, then go up. So when I say we don't trade structures, I'm trying to say these things double bottom. So we are going to buy. I've seen double bottom that has failed. I've seen a lot these past 3 years. I've seen a lot. Don't just go to the market and look for this. We are going to trade this. This thing has to be validated. This thing has to be validated. So how do we validate our setup? How do we validate our setup? We first of all in the trade, right? First of all, how do we even do our down to top analysis, right? How do we do our down to top analysis? First, we locate our setup. Let me do it from here. We locate our setup. That is number one. Locate your setup. Then this is number two. We validate the setup. Validate the setup. Then number three, we look for where price is coming from. That is what. So these are the three rules. All right. First, locate your setup, validate your setup, then look for where price is coming from. So meaning it is not enough to come and look for this and say you are look for this and say you are coming to trade. No. First of all, yes, we have found the setup. It's nice. It's looking good. We have to validate it. We have to validate it. Is this setup approved? Is it meeting all the requirements that we need? Then finally, we have to know where price is coming from. So already we have plotted our setup here. We know how our setup looks like. So now we have to validate it. So how do we validate our setup? Okay. How do we validate our setup? This is validating. Okay, so to validate setup, we first of all look for, as usual, or as we have said, we look for a sweep. Let's get it right. A sweep of liquidity. One, we look for a sweep of liquidity, a break of structure, and finally structural liquidity. So this is how to validate our setup. We look for a sweep of liquidity. In fact, let's label it with, because we use for something. Yes. So number one, we look for a sweep of liquidity. We look for after we get our sweep of liquidity, break of structure, then finally structural liquidity. All right. Finally, we get our structural liquidity. So let's do it. Okay, so let's do it right here. So first of all, what did we say we look for? A sweep of liquidity. All right. Let's get this in place. Validating our setup. So we look for, let's draw the figure down here. Wow, this. Then we have this. Let's pick you and put you here. Then we have this. All right. Yeah. So what are we looking for? Let's come here. First, we are looking for a sweep of liquidity. So this is number one. Can I write one? That is a sweep of liquidity right here. So number one. So this is number one. What else are we looking for? A break of structure right here. Number two. What again are we looking for? Structural liquidity, which is right here. Number three. So you see, let's see if I can clean this. Sorry, my bad. So that after that we get our POI right here. Okay. So we have located 1, 2, 3 here. Let's come to this side and see. What did we say we are looking for again? We said we want a sweep of liquidity. This is for the sellers, all right? A sweep of liquidity, which has happened. A break of structure, which has happened here. And structural liquidity. So this is number one. This is number two, and this over here, number three. Our POI rest here. So this is how to validate the setup. If there is no structural liquidity, meaning if you have this, we don't just go to the market and say we are looking. Okay, let me calm down. If there is no structural liquidity, there is a high chance. What is structural liquidity? That's number three. Let's say you go to the market and find this. Sorry. When you see something like this, yes, although we have a sweep and a break of structure here, there is a high chance because there is no structural liquidity. What do we mean by structural liquidity? This, that which will form here before price will go. If there is no structural liquidity, there is a high chance this will be induced, meaning an inducement liquidity will rather take place. When there is a structural liquidity, it confirms, it will mean that this high here, that's if you are selling, is protected. All right, but if there is no structural liquidity, there is a high chance that that high over there will be induced before probably an actual sell. And I told you that structural liquidity is used for expansion. So once there's a structural liquidity, price begins to move insanely downwards. That is for selling. If it's a buy, sweep of liquidity, then there is something like this. There is no structural liquidity. We have our sweep here, we have our BOS here. Then there's no structural liquidity here like this. There's no structural liquidity here like this. Oh, there's no structural liquidity here like this. For price to now take out the structural liquidity for you to buy from here. If that is not there, there's a high chance this will be induced before expansion, crazy movement of price. All right, so validating the setup is very necessary. We don't trade structures, we have to validate it. So we look at the setup, we look for number one, a sweep of liquidity right here. I get my arrow. Yes, a sweep of liquidity right here. Let me say you know more. Number two, a break of structure here. Number three, structural liquidity over here, which was taken out. The same thing here. I need you to pay close attention because this session won't be long. Number one, a sweep of liquidity. Number two, oh boy, number two, break of structure right here for number two. And finally, number three, structural liquidity here. I took my time to explain this with diagrams and with illustrations so that you will get it. I didn't want to bore you with long speech and all that. No, a pictorial something will help communicate, a practical something will help communicate the understanding. All right, so that is how to validate your setup. You look for a sweep of liquidity, a break of structure, and structural liquidity. Let's see the market for a graphical example. All right, which market should we even? Okay, let's look at Ah, okay, so let's look at GBP card. GBP. So if you want to check your order on trading view, right, you just type what, just as you're on trading view on a chart like this, you can just come to this point where USD JPY is. You click on it, you have all this, then you type in the forex pair you're looking for, GBP card. All right, you can click the forex column. It will bring you, there's stocks, funds, futures, crypto, forex, indices. We are dealing with forex now. So GBP card. Okay, on the 4 hour, let's see if we will get GBP card on the 4 hour. So we can see something like that here. What are we seeing? I hope you can see the screen. Kindly give me a thumbs up, give me an action if you are with me here. What are we seeing? We are seeing a sweep of liquidity, a break of structure, structural liquidity is right here. All right, then what do we have? We get our PO high here. So this setup has been validated for us. And what did you realize? Price came here and bought from here. It's like magic. It's like magic every time. It's like magic every time. Every time. You've already gotten 100 pips. Okay, we can scale to 200 pips. Every time. It works like magic every time. Okay, it works like magic every time. So this is just a graphical example. What other pair can we look at? Let's see another pair. Who GBP AUD. GBP AUD. Very, very important. Ain't that beautiful? So we see our sweep, right? What does that mean? It means that basic market structure was supposed to take place here as we were told, but it didn't happen. Price came like this, then instead of continuing this way, it rather came down to close whoever had their trade set up there. So the sweep happened. All right, let's take this from there. Our sweep happened. Our BOS took place here. We had structural liquidity formed right here. I think you see it better on the 1 hour. Great. And structural liquidity right here. Structural liquidity right here. So where is our POI? Our POI, my POI can start from here. Okay, let me go back to the 4 hours so that it will be shorter. Yes, so my POI start from here, and then boom. What do you see? We got our entry from here. Our POI happens every time, every time. There are a lot of chart examples. All right, there are a lot of chart examples. So once you go to the market, you first of all locate your setup, then you validate it. What are we seeing? We are seeing okay. Let me take this thing from there. What are we seeing? We are seeing number one, our sweep of liquidity. Number two, our break of structure. Number three, our structural liquidity. Our structural liquidity. As easy as easy can be. As easy as easy can be. I think I'll do one last one. Okay, so let's look at card CHF on the 1 hour. Let's delete this. Card CHF. So looking at card CHF, Where will we find one? Where will we find one? Oh, this is beautiful. You will understand me when you fall in love with it. So first of all, we have our sweep, right? Our sweep of liquidity right here. We have our BOS right here. We have our structural liquidity right here. Because this has already played out, you find it hard to, yeah. So meaning our point of interest comes here. And did you see that? This is our last demo. Did you see the move on this pip? Did you see that? You would have covered all of this side, getting 100 pips, and you are gone. And you are gone. What did you realize? You realize a sweep of liquidity right here for a sell, right? Break of structure right here, structural liquidity right here. Then you placed your point of interest right here, and that's exactly where price came and reacted from. Let's see something, if you can get something from the 1 hour. 1 hour, 1 hour, 1 hour. Okay, since you can get something on the 1 hour, I can see a sweep here. That's so you see, as I open the chart, that is what I'm looking for. That's the first thing I'm looking for. I can see a sweep here. There is a break of structure right here. And there is structural liquidity right here. I've got my POI right here. Oh, have you noticed that price comes and hit what did we say our POI is? Our POI, if it is a sell, right, the last bullish candle which we have is this green candle here. Okay, so we have marked our POI. It has been marked. So that last bullish candle has been marked, and what did we get? A precise entry right here for a sell. All right here for a sell. So this is even a good setup. I don't know if you can decide to scale down, but let's just, it's a precise entry. You got in, you scored your TP. So this is how we do it in town. This is how we do it in the market. All right, let's come back to the drawing board. So we validate the setup. We have already seen chart examples of the validation of the setup and how it's played out. All right. So first we locate our setup, which we have learned to do. Check. We validate our setup. We say first a sweep. Let me bring it down here. Validating our setup, we say first a sweep of liquidity, a break of structure, then structural liquidity. So validating our setup, check. Now where price is coming from? Where price is coming from? You know, this is an important part because when we started, everything we said was to let you know that price moves between two zones. The supply zone, then the demand zone. I hope you are following. The supply zone and the demand zone, we are expecting price to be moving like this. Let's say it's a buy, right? Price hits supply, comes here. Then this zone either takes this zone off, meaning it's a bullish trend, right? It's going up. Or something like this happens, all right? Meaning this zone right here is in control. So we have on our hands a swing setup. So according to the laws of basic market structure, price is supposed to do this, then sell. And I told you that most times it doesn't happen. This rather happens, especially in this specific case, we have already seen a break of structure here. All right, a break of structure here, but there is no structural liquidity, so this high is not protected. So what we realize, the price comes, it will induce it, it will take it off before an actual sell happens. You get it? Yeah. So you don't want to be the scapegoat that will be taken out before the actual move. So we have to know where price is coming from. We begin at locating our setup, validating the setup. Now, once we know where our setup is, we have validated it, we have to know where price is coming from. That is where we take our Fibonacci tool. So let's go back to GBP AUD. All right. Okay, let's start from CAD CHF. So you realize that we are on this is the daily, right? In fact, on the daily, you realize that market is going down, so it's a bearish move already overall on the daily. And then you come, sorry, that's on the weekly. So you come to the daily, then you realize that we have a swing structure. What do you mean by we have a swing structure? Well, we can see this. You can see this. Can you see it? Can you comment if you can see it? What are we saying? We are saying that we have a BOS right here. So it's confirmed you have a swing structure, meaning we are expecting price to come to this zone. But have you realized another thing? There is, since price has come to this, we don't trade on the daily or the weekly, so we get this place for direction. All right, we want to know where price is going. So you know that the law of basic market structure says price has done this, price will come back here to buy. All right, so now we go into our substructure on the lower time frame. Let's go to our 4-hour time frame. So meaning we are expecting that price is coming back into this zone. All right, then we had to do something else. We take our Fibonacci tool, then we mark out our premium and discount zone. So this is our discount zone, is right here. Our discount zone is right here, and our premium zone is right here. So we buy at our discount zone and we sell at our premium zone. That is why we go, and when price hits equilibrium, that is the part where you end every sell, because now we have entered the discount zone. We start looking for buy setups in this zone. That's the discount zone. All right, this zone. So let's do that. As of now, we are selling because we are in the premium zone, so price comes back down here, and that is how come we're able to locate our brother here, and we got our sell from here, like I showed you before. How did we get the sell from there? We saw this one here. All right, I already showed you before. When you watch the video, you find it there. This is our sweep of liquidity. Okay, let's just look at it. All right, so remember, we are selling down into that zone. We located this. We located our structural liquidity, and we entered right here at this point. Yeah, we entered right here at this point. Then we sold to this part. We also came here. Okay, this is cash feature. So we will be selling down to this point until we get to equilibrium, right? Meaning that once price crosses this zone for our sell to hit TP, when the moment it gets here, we start looking to buy. So we wait for a buy setup. But so long as we have not gotten there yet, we are selling down to this zone. Okay, now let's go to GBP AUD. GBP AUD. Let's take everything from here. So why is it important to know where price is coming from? Because you cannot take let's first of all let's check it out on GBP AUD. All right, GBP AUD. Okay, already I'm seeing, like, I just opened. My eyes are seeing and spotting sweep of liquidity. So it's something you have to train your eye for when you practice. All right, and I have my this here. So this trade has already taken place over here. This trade has already worked out. And remember what I said: if the structural liquidity and the QMR are the same zone, what do? You put your POI up here, the other block that is up here, and it will give you a, this one is a beautiful work of art. It will give you a precise entry. Imagine a beautiful work of art that is giving you money. You just sit in your house, then you do this, a beautiful work of art that is giving you money. So it gives you a precise entry. All right. So it's a good sell down here. All right, let's tell a story. Okay, we can see on our weekly time frame, where is price coming from? What do we see? 1, 2, and now we are seeing substructures form. So already we confirm that, and so we have a swing structure like this. We confirm that we have a swing structure like this created right here, meaning this is our zone. We are looking at price to come into that zone. What then happens? We go to our lower time frame, straight to our substructures. Okay, so this is the daily. We are looking for sales into the, do we find any other, what's that thing called? Imagine this. I am locating my first setup here for sales. All right, I'm locating my first setup here. Setup. Am I correct? Yes, a sweep of liquidity right here. So you see, you have to learn to validate it. I'm seeing a break of structure right here. I'm seeing structural liquidity right here. What then happens? Oh, lovely. Take this one like this. Price gives us precise, our structural liquidity was taken. Price gives us our wonderful entry, and voila, we are in. Okay, we are in. We cover the high, and then boom, we have our entries. Why is it important to know where price is coming from? Because you cannot just look for the setup, you are validating it. Then imagine the moment price comes, let's get our feet to. You see, our trade started from here. Now we have gotten into this zone. This is the zone where you start looking for buys. All right, this is the zone where you start looking for buys. We have crossed our equilibrium. Just to stay on the safe side, you no longer start looking for sales after this. Let's reduce this to, now we are looking for entry, right? So let's say we want to enter this trade. Let's go down to the daily. So now, as we have reduced it to, from the main low to the breakout point, it has given us another equilibrium and discount and premium zone. So we look for our, what's that thing called? The zone where we can find our entries from. But we do not trade on a daily. All right, we don't trade on a daily. So for those who are more aggressive traders, they would still want to sell down to this side. But you, to stay safe, you can say, okay, I am done. I've already gotten to the 50%, the equilibrium from my shrink, and I have already gotten what I want, so I want out of it. Then you go out of it. So from here, you don't look for sell, you look for buy. If you find, what will happen to you? If you find the string structure, meaning you want to buy from here, and currently we are having substructures move down here, then you say you are here. Price has gotten to this zone. You are still looking for a sell setup to sell. There is something wrong with you. Why? Because you are not, according to the rule, if you find a setup here, you will have to ignore it, because this is where we have to find buy setups. Just because you are seeing a sell signal here doesn't mean you should take it. However, if this is our equilibrium line, all right? However, if you find setup, a sell setup right here, you can take it. Above this zone, you can take it. Don't go and look for a buy setup here. It might shock you. You'll be used for meat, meaning that so long as this BOS has been registered, price is prone to reverse, correct itself back. This is not where you should be looking for a buy setup. You should be looking for a sell back down here. And to get that, you have to validate it. Okay, you have to validate it. You'll be trading the substructures down to this zone. So if you are selling, your focus is here. The moment price touches this place, you just mind your business and go. If you are buying, you wait for price to come here, then you look for buy setups to the upside. So the upside. All right. I have shown you chart examples, and I hope you'll be practicing them. Ladies and gentlemen, we have learned a lot. We have learned to put everything together. We have learned the down top analysis. Okay, we learned to locate our setup, validate our setup, and tell where price is coming from. Validating we were able to locate our setups. We did this. We drew our setups. We validated it. We said we are looking for what? A sweep. Validating it, we said we are looking for a sweep of liquidity, a break of structure, and structural liquidity. Then we labeled the diagrams: a sweep of liquidity, a break of structure, and then structural liquidity. Over here too, a sweep of liquidity, a break of structure, and structural liquidity before there is the sell. And then we checked to see setups that played out, where price was coming from. We labeled our swing structures. We used our fib tool to tell our discount zone from our premium zones. We said that when price is at our premium zone, that is where we look for sales into our discount zone to be able to buy, right? And we said when price is at our discount zone, where we have our zone here to buy, that is where we look for our buy setup. If you go and look for buy setup here at your premium zone, you will be meat. You'll be used as meat. Price will take you out. That's why I said we don't trade structures. We follow rules. If you come and locate your sell setup here at a discount zone, another meat, you will go. So you don't just look for setup at anywhere. No. You first of all locate your swing structure, your BOS, right? BOS. Then you start looking for sell setups into the equilibrium zone where you take a trade to. Alright. In case it is a sell swing you are looking for, in case you are looking for this kind of swing instead of this one, a bearish swing, you look for your BOS. You start looking for your setup to buy into equilibrium. When it gets there, you are out of the trade. You wait for, this is your zone you are coming to sell from. You wait to find a sell signal here, then you enter into it to sell overall. That's the continuation pattern, to sell overall. So in this case, your sell is a continuation, but your buy into that sell zone is a temporal entry. Thank you very much.